Hello and welcome to Crypto Weeklies. Today in this video we are going to discuss and analyze Jasmy, conduct machine learning based price forecast, regression analysis, accumulation strategies and estimated bull target for Jasmy. None of the content is financial advice. This is the machine learning algorithm trained on weekly price action for Jasmy since about 2021 when early 2021 when Jasmy was released. Right now, over the last 24 hours, Jasmy has been rallying by about 13 and almost 14%, price about 2.2 cents. In terms of tokenomics, almost the entire max supply is in circulation. That means impact of any token dilution from here on the price would be minimal. The estimated scenarios forecasted by the model in a bull case for Jasmy between 2.7 cents till about 20 cents between now and April of 2025. The base case is kind of flat, and in case of a bear market, in the wider cryptocurrency market, the prices could be between half a cent and as 1.7 cents. So that's the estimated forecast for Jasmy. In terms of some of the recent technical analysis related to Jasmy, you can see that currently the price of Jasmy is still below the 20-week simple moving average and 21-week exponential moving average, slightly higher than those two averages, but has not had a weekly close above the moving averages. So in terms of some of the key levels to watch is if the prices manage to be above 2.2 cents for the remainder of the week. And this also in terms of some of the longer moving average, this is the moving average at for 200-week moving average, 200-day moving average. The line in blue, when it shifts from blue to orange, that means the price is above the 200-week moving average, 200-day moving average, as well as the 300-day moving average in this green line. When this line turns red, that means price is above the 300-day daily moving average. In terms of the Fibonacci retracement based analysis, and the 4.5 cent level for Jasmy would correspond to a move that Jasmy made from the bear market low of 2023 till this bull market, like middle of bull market high of June of 2024. Right now the prices are close to this 0.5 Fibonacci level. So the next key level is 2.86 cents and then 3.48 cents. That would correspond to the last two Fibonacci retracement levels before reaching the yearly high of about 4.5 cent. In terms of analysis of Jasmy, we have a set of regression as well as accumulation technique. First we'll go with the regression analysis for Jasmy. This is the weekly candles for Jasmy. On top of these weekly candles, this is the pink line which represents the polynomial regression analysis of Jasmy, polynomial regression function where the prices have a non-linear relationship with time. During the bear market, the function has a downward slope. During the bull market, an upward slope. Per this analysis, the fair value line for Jasmy is coming in at around 3.9 at almost 4 cent level. That means currently Jasmy is undervalued with respect to its fair value based on the polynomial regression analysis, and to the degree of close to this 1 standard deviation residual applied to the polynomial regression function. That means the key level to watch to the downside is this 1.856 cent. So 1.85 cents, and if the prices keep on holding its own on their 1 standard deviation bottom, then the next level to watch is this rally to the 3.98 cent. And in terms of a peak, we can see that in the last bull run, that is in March as well as in June of 2024, the prices did go slightly higher than this 1 standard deviation residual to the upside. That level is currently at around 8.53 cent for Jasmy. And again, over a macro, for a macro peak at around 2 standard deviation, you can see in the bull market usually the prices have for Jasmy have reached the 2 standard deviation level at around 18.3 cents. kind of a confluence between this regression based analysis of 2 standard deviation peak and the machine learning based forecast for Jasmy at around 20 cent sometime between now and April of 2025. Now we can spend some time analyzing the accumulation strategies. This is the SMA model, which checks the price and its relationship between the 20 week with the 20 week simple moving average. Based on that relationship, the color codes are assigned and risks are normalized between 0 and 1. The color codes reflect the risk levels. Right now the risk associated with accumulation is between 40 and 50%. That means it's a 50-50 split with respect to the shorter term bubble risk and 20 week moving average based accumulation. The key idea with this analysis is to avoid DCAing during some of the high risk level. Let's say anything above 60% risk is high risk. With this model, you are essentially avoiding accumulating, let's say at these level above 50%. Right now the risk with this is at around between 40 and 50%. Most of the time Jasmy spends in this risk level. For this analysis, what can also be forecasted using expected values at certain key risk level into the future. Prices currently are at between 0 and 5% risk, but let's say if the market heats up and Jasmy goes to 0.6 risk, at that point in time the price corresponding to that risk level is at around 17 cents. Between 17 cents and 22 cents, again a confluence between those price predictions. That would represent a moderate to slightly higher target for Jasmy, and the lofty goal for Jasmy between 23 cents and 26 cents in the coming 20 weeks. So this is again one way to utilize this model. Again, all of these models are available on cryptoweeklies.com, the link on the bottom of your screen. And as shown in the bottom of your screen, you don't have to pay or sign up for anything. All of the models are available. In terms of the dollar cost average model, this is yet another model which if you see this regression band, you will find that this gray regression line represents the polynomial regression function that we covered on those candles. Instead of a weekly level, this looks at the daily close, and based on the relationship between the price and this regression line, the risk levels and the color codes are assigned. Per this model, right now the risk associated with accumulation is 10%, and again the key idea with this model is the same thing. Whenever the risk levels are sufficiently low, dollar cost averaging in the market makes sense, as well as dollar cost averaging out when the risk levels are higher. So for example, this red zones are where dollar cost averaging out makes more sense. In this purple zone, that's when dollar cost averaging in has made sense. You can see over here right now we are in that purple zone, and if to expand the scope of the DCA at some of the low risk level, you can again per your own risk tolerance between 10% or less than 10% or less than 20% risk, 0.2 risk. That is also a range till about that was available since August of 2024, and throughout the bear market of 2022 and 2023, Jasmy was in this risk regimen. And again, one way to extrapolate this using the DCA model, we can also come up with a peak regression analysis, where again currently at around 11 cents, this is represents a 2 standard deviation peak. You can see historically speaking, that is in February 2024, the price did go to those peak regression levels. Again, you can see over here the green dot, as well as this rally till about March of 2024 reached the red dotted line. Right now, per this model, the risk is between 15% and 20%, and to extrapolate this risk levels, the moderate target between 8 cents and about 12 cents per this model, which would represent between 60 and 85% risk per the DCA model, and the lofty goal between 12 cents and 14 cents. This is more conservative than the SMA model. This takes into consideration what was happening throughout the market cycle with respect to the price. Again, we do have a future regression line where, as well as future peak regression line, where the prices for Jasmy in 2025 could go per the model at around if the market heats up at the same pace like it heated up early 2024, could be at around 60 cents for Jasmy. So this is again a way to analyze Jasmy. And per the time weighted average price model, you can see that prices have been lower than this blue line, which is the time weighted average price. That's why the risk per this model is at around close to zero. To summarize all of these three models, we have an estimated bull target for Jasmy, which is a composite of the models that we discussed. The DCA model saying at around 10% risk, the time weighted at around 0% risk, the SMA model close to 50% risk, the weighted risk for Jasmy at around 15%, and the bull run peak based on the latest price and the weighted risk is at around 14 cents. That represents a reward of about 6.5x. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.